Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of having a conversation with Edna, and she is a veteran investor, and she runs her website and her coaching at ednakeep.com. She has multiple students and a veteran in the real estate industry. She has done a lot of single family apartments and all types of joint ventures and syndications. So we are looking forward to, hear her advice and her experiences today. So welcome to the show, Edna. Thank you for your time today.
Thank you very much. It's a pleasure to be on.
Awesome. So help us get started, Edna, as to, a little bit about your background and, how you came into real estate. And I know given your finance background, you have a special sort of interest towards how you came into real estate. So we would be interested to know that.
Sure. Well, my background's as a financial advisor. I was a financial advisor selling mutual funds and life insurance for about 15 years. And I liked it. It was a fun job. I always thought, this is, where else do you get paid so well to really just visit with people? And I loved it. I loved getting to know my clients and all that kind of stuff. In 2007, the markets were correcting, and it's the second time it had happened to me with mutual funds. So it wasn't the fun part of my job telling people their money had dropped. And so we started looking at another stream of income for ourselves, because all our income was tied up. Like my husband had his own job, but all my income was tied up with mutual funds. I had been invested everything in mutual funds. We thought, we should maybe diversify a little. So a bunch of my clients had been in talking to me about what they'd been doing in real estate. And so I checked out just an evening event with Robert Kiyosaki, and that's how I got introduced to real estate. And, within a very short period of time, once I really understood real estate, I couldn't sell mutual funds anymore. And I actually sold my practice 2 years later and went full-time into real estate. And, a lot of people told me I was crazy because I was making good money. Like I was making routinely over $250,000 a year.
Wow, that's a lot of money.
Yeah, and I only worked about 3 days a week. So people really thought I needed my head examined. But, I could see the writing on the wall.
Sure.
And I understood real estate. I could see how it could really work for us. In our first 18 months of starting, we had 50 doors. So that when we started out, that was kind of our 10-year goal. So when we seen how quickly we could do it, and we did it in 18 months, we knew we were onto something. And the passion was there. It was exciting. It was fun, and learning something new and making all these purchases. And we actually partnered with another couple very early on that we met through the Robert Kiyosaki training. And they were a couple years ahead of us. So they took a lot of our fear away from being open to investing in something, because they'd already done it, right?
Sure.
So I've been a big believer of joint ventures right from that point. We were joint venture partners first before we ever started doing it on our own.
That's awesome. Thank you for that detail. And I was just going to ask you, all the listeners listening might be thinking that, geez, so 50 doors within 18 months is as incredible as it is. I guess the next follow-up question becomes is that, hey, how did you, amass the capital? Or was that from your personal net worth that you invested and things like that? Share with us, how you got that sort of the start and how you quickly scaled to that 100 and I guess the 50 doors. Was that just through sort of looking into MLS or some off-market deals? Tell us a little bit more detail about that.
Sure. Well, when we very first started, first of all, one of the things that people are always worried about, whether they need capital to invest in real estate and stuff. In our area, the market, housing market had went up a lot. So we had almost $200,000 equity in our home, even though I
Wow.
owned it for 5 years. And so that's actually how we started. We used our own home equity line of credit. It was what we, my investments were all in mutual funds, and the mutual fund market was all down. So you don't want to take everything out when it was down. So it's actually what I used for education and everything. So we bought a single family condo with the equity out of our home. Within a couple years, we were able to refinance that property and take all our cash out. But that was our start. Our third property, we actually we got the homeowner to invest with us. So she invested the full down payment. And one of my favorite classes I took with the Kiyosaki group was creative financing. And so we learned about vendor financing, seller financing, that sort of thing. So we had enough money to put the down payment on, but we knew if we left our own money in there that very soon we wouldn't be able to do it anymore. So we knew and had been taught that if we were going to scale, we had to learn how to use other people's money. So she was our first one. She was so excited. She was so happy because she said, finally I win twice in my life. I get full price for my property because we paid her full price because she gave us a full vendor take back. And I get 6% interest on my money. So she was happy. She didn't want to be in the rental industry anymore. She'd been taken advantage of even by her own family. And then from there, you know what? We just started adding. We started adding in. We did rent to own properties, and we did some buy and hold houses. And then we hit the ceiling, and we couldn't get any more houses in our own name, even though we had a significant net worth and really good income and all that kind of stuff. At some point, you're cut off no matter what.
Sure. Was that, Edna, because of I know yours is a Canadian market, and we here in the US typically have thresholds from Fannie Mae about, how much properties you can finance in your personal name and things like that. Is that the threshold you're speaking of regarding financing in Canadian market as well?
Yes. Like we started out with a corporation. So our first, I think 7 or 8 properties were right in our corporation. Then we couldn't get any more in our corporation. And then we put a few in our own personal names. And then from there, we just couldn't get any. So we moved into multifamily. So we went from 26 doors to 50 doors overnight. So we got a 24 unit.
I see.
Yeah.
I see.
And that was when we really started understanding the scaling, because before that, we were like the typical investor. We were thinking we didn't have enough houses to move on to apartment buildings. We thought we had to have more houses. And the realtor I spoke to, he said, oh no, he says, your net worth is good. You guys have already learned how to raise capital, bring in joint venture partners. You can do an apartment building. So the same day he told me about the deal, I put an offer on, we got the offer accepted. And we joint ventured partners with the couple we'd met through the training. And then we brought in investor capital for the rest of it.
Awesome. And as we learned about your bio as well, Edna, there that you have coaching, you have done syndications, you have done real estate funds as well. Give us a broader perspective on what today your sort of your entire portfolio looks like, whether it's coaching, real estate, and different activities. Give us a sense of how much you have today.
Sure. Well, you know what? Right now we've got about $65 million worth of property, and that equates out to about 600 doors. We feel like we're actually probably going to double our portfolio this year.
Wow.
We just started a REIT in January. And before that, we had reached 522 doors over a 13-year period. And then, you know what, we just kind of got tired of managing the whole thing. And we decided if we did it through a REIT, we could have all the managing partners in place and we wouldn't have to do so much. My specialty is kind of working with finding the deals and financing them. And then after that, I want somebody else to look after the deal.
I
And
see.
so when we started up 3 to have partners that will look after that part of things. So we've already got 80, we just started in January, we closed on our first 80 units in one shot here.
Mhm.
And we've got another 180 and another 300 under contract. So that's why I'm saying right now, by the end of the year, we could effectively double our portfolio. But
I
you know,
see.
we started out just joint venturing. We started out joint venturing a house, then another house. And after we did like 12 joint ventures in a year, we decided, you know, well, we may as well just go back to doing more apartment buildings because it's a lot more efficient. And we can, it's kind of unlimited funding with apartment buildings, especially if you have different joint venture partners with every deal. So every deal is kind of new net worths, new, you know, people to pull the requirements from.
Right. So you essentially you're starting from sort of a scratch, or you're starting with basis zero as every new deal comes along, and you don't have the limitation that, oh, you're stuck at, you know, whatever 3, 4, 10 in your personal name or corporation, and each new joint venture that you do, it's a whole new sort of branding and corporation that you can go and finance. Is that kind of what you're referring to, basically?
Yeah, we still have to do our corporate guarantees and stuff like that on them, but as do the investors. But they more look at the building than they do at you, because they're treated like a business. Does the building make sense financially? Does the income cover all the expenses and enough left over to make it worthwhile? That's
Absolutely. Now I want to shift gears, Edna, a little bit and maybe try to understand, you know, like sort of what is in it for the passive investors. Like as you know, as active investors as we both are, we both understand, you know, the tangible benefits that real estate brings in and things like that, right? So, but I want to, like, you know, sort of shift the gears a bit and, you know, learn about your experiences that when you engage different joint venture partners, right, or folks who are coming into your syndications, what is the appealing for them to invest with you? Like, what are the benefits basically that you are providing that they want to partner with you in your projects?
Well, first of all, is understanding, you know, the market and already being successful and having multi properties. But, you know, even for brand new people that I train, it's all about building the proper power team. You don't have to do everything yourself. Like, you don't have to wash the floors and renovate the properties. You know, we hire that kind of stuff out. Somebody has to oversee the whole project, like get it under contract, get the financing in place. And where we benefit the investors is we understand what a good deal is. And you know, and sometimes we have a challenging deal and we still have to deal with that. The investors don't. They basically get to write us a check and get to share in the profits where we do all the work. So ultimately, I think all of us would like to be on the check writing side. But when we first start out, that's just not the case. We need other people to start helping us build our real estate wealth. But you know, lots of people want to invest in real estate, but they don't want to take the time, and lots of times they're just scared to do it themselves, because as you know, there's a lot of stuff, especially in bigger deals, that could go wrong, and you don't want to end up with a bad deal. So that's where, you know, I teach my students, that's where we can really, really excel and help a lot of other people excel at the same time.
Sure. Now let's talk about, you know, sort of how you specifically structure the deals. Like, let's say if it's a joint venture or a syndication, give us some sort of guidance or some examples of how you have structured your deals, whether it's joint ventures or syndications and things like that.
Well, you know, we've pretty much done everything. Like, we've done vendor financing. We've done agreements for sale where we've got properties with a down payment and then went to work and did all the work and then got them financed. But generally, we set it up where us as managing partners own a certain percentage of it and the investors own another percentage of it. And we build our equity through all the work involved, including finding the deal and managing it and reporting on it and all that overseeing the property managers and all that sort. But we've done it in syndications where we've had like up to 12 investors in one deal. Now we're moving on to a real estate investment trust where it's unlimited how many people we can bring in and how many investments we can do inside of it. It just depends what kind of deals we can find.
Sure.
But yeah, we've done even just like a single family home where we shared 50-50. The investment partner put in the capital and we found the deal and managed the deal and shared in the cash flow and then the profits. And
Sure. Right. Up in US, generally the syndication model, that's again, I say generally, again, there are a lot of different ways how they structure it, but in a typical syndication, it's 70% to limited partners, 30% to, to the general partner, and depending on the operators, they can have a 8% preferred returns and things like that. Is how is the syndication structure in sort of on the Canadian side, on your side?
Well, we can structure them any way we want to. And what I teach my students is, you got to look after yourself first. I've got many investors that want to go into this full time. So they want to replace their income and have enough cash flow so that they can do it full time. So I tell those people, it's better for you to take a smaller ownership position, but take some of the cash flow each month. What we chose to do at the beginning, because we were in a different situation, we had really good cash flow, we had good net worth, we were looking at more the wealth building side of it. So we took larger ownership positions, but we also didn't take any cash flow until the investors were 100% paid out.
I see.
So in some cases, like for example, our first really big deal that we did was 144 units. And the managing partner brought it to me. I raised the capital for it. It was $1.2 million. They own 30%, I own 30%, and then the investors own 40%. But the key with that one is we knew that we could force a lot of appreciation in it. We got a really good deal on it. So after we took possession, we started renovating the units and increasing the rents. And within 36 months, we had our investors totally paid out. We knew that was going to happen. So that's why we got away with giving them just 40% and we got 60 because the time frame was shorter. Another deal, we did a 24 unit. Our turnaround time was expected to be 18 months. So we ended up with I believe 70% ownership and the investors 30%, because what we did is we used their money for the down payment and the renovation costs. We did all the work on it and we refinanced, got them all paid out quickly. So within 18 months, they had all their money back. So again, they got a lesser ownership because of that, because I know some investors, like you were saying, lots of times it's 70% to the investors. A lot of it depends how much work's involved for us and and our value, because in this case, our value to the deal was huge because there was a lot of work for us to do in order to turn that property around in 18 months and have everybody paid out.
Sure. Now, it sounds like you're referring to, what we call like a deep value add, wherein, you're doing a lot of work in terms of whether it's interior improvements or exterior, sort of things, right? Give us a sense of, Edna, as to, how old vintage your properties are, and what sort of age there, and what sort of improvements you have done to certain projects within your projects.
Sure. Well, each one's been different because like with that one, it was a little bit older. It was built, I think, in the late 60s, early 70s. So there was a lot of renovations. Like we drywalled some places, put in new fridges and stoves and blinds and flooring and all that kind of stuff. So we did a major renovation on some of them. But some of them that we've purchased have been turnkey. So a little bit different idea there too. But I'll just give you an example. 2 years ago, we bought 38 units turnkey. We walked in, took over. There was no renovations to do. He kept everything really nice. It was fully occupied. Rents were at the max. We couldn't even increase rents. Wow. But what was nice there is we could immediately start paying out our investors. We didn't have to wait to build up the cash flow and all that kind of stuff, which happens sometimes. And the other sweet spot with that one is we got vendor financing of
Oh,
10%
nice.
of the deal.
Mhm.
We got CMHC financing, which in the US that's considered like Fannie Mae, Freddie
I
Mac.
see. Mhm,
So
mhm,
we only had to put like 15% down. So we got 10% vendor take back,
mhm,
5% financing. But going in, we didn't realize we were going to be able to do all that. So
mhm,
when we put it out to our investors, we put out, for each 100,000 that you give us, you're going to own this percentage.
mhm, mhm.
In the long run, when it was all said and done, we only needed to raise $200,000 on a $4
Wow.
million
Mhm,
deal,
mhm.
because the majority of the money came through the vendor, which we just paid an interest rate. So
Sure.
in the long run, again, I had two managing partners on that. One that lives close, and then one that was here, and
Mhm,
we just partnered up because we'd done some other deals, and it was kind of a sweet deal
mhm.
that we were working on together. So we ended up with 45% ownership, the managing partner 25, and the other partner 20, and the investors ended up with what's left over, 10-15% ownership, and that was it. So
Mhm,
we really did well on that. But again, we created that deal.
mhm.
Created that deal by getting the vendor take back. We created that deal by getting the CMHC finance, because not everybody qualifies for that kind of financing
Sure,
either.
sure. I
And
see.
so that's why the majority of the ownership went to us, that we didn't need very much investment capital.
I see, I see. Now, shifting gears a bit, Edna here, you also do mentoring and you see a lot of students, within your program. Give us a sense of, like how you are teaching the students and what sort of mindset is needed for students to be successful in this sort of the long-term game of real estate.
Very good question. So, I'm a big believer in mindset. I always say, no matter what level you're moving to, because it doesn't matter where you are, we're moving to a new level.
Sure.
And especially if we hire mentorship, we're planning on doing something different. New level, new devil. So all the time we're working on increasing our own mindset. You'll go through the same things, right?
Sure,
Every
absolutely.
time, it was a shift from us to go from single family homes to a 24 unit. We
Mhm,
really had to wrap our head around it.
mhm,
And I was fairly quick wrapping my head around it, but still there was challenges to it. It took us
mhm.
a while to get the financing because the rents were too low. It took us, even the bank would only give us 50% financing. So we had to do a lot of private financing. So what I tell people is, you really got to wrap your head around mindset in the long-term game and in the creative game and dealing with other people's money. Because one of the biggest fears when people come to me is, it's one thing using my own money, but if I lose somebody else's money, that's terrifying to me.
Sure. Mhm.
And I go, you know what? You people are my favorite kind of student. Because if you came to me and you said, I don't care if I lose somebody else's money, I wouldn't even take
Ooh,
you on,
I know. Mhm.
You want people who go, yeah, it terrifies me, so I'm going to do whatever is possible in my
Absolutely.
power to make this deal work. So
Sure.
that's the
Mhm.
kind of attitude I want. That's the kind of attitude I teach.
Sure. Mhm.
And I help you with the whole, you decide and it starts to happen. Like some of my students will say, well, I don't have any money lined up to put the down payment down. How can
Mhm.
I make an offer? And I'll tell them, you know what, you make the offer, the money will come. You're never going to line up the money until you need it. So let's make that offer, and then things just start to happen. And students are really, who really realize that and wrap their heads around it, they go on and make all kinds of purchases. And they will tell you, you know what, Edna, when you told me at the beginning that I could do this and maybe own a property within 3 months of starting with you, I thought, yeah, not me. Maybe you, maybe your other students, but not me. And now 3 months later, I'm closing on a building. It's like flabbergasting, but that's with the right guidance and the right system, you can do that. And that's the key. And it really is wrapping your head around the idea. And the other idea is, a lot of people think, everybody out there have money and I don't have any money, so they've got all the power and I don't have any power.
Mhm.
That's not true either. I teach you to get the mindset of, I've got the gold. You got
Mhm.
some money, so do you. Lots of people out there have the money. I got the gold. I got the
Mhm.
property. I got the key piece, the key ingredient.
Mhm.
And not everybody's going to invest with you.
Sure. Mhm.
But for the right deal, you'll have your investors there.
Awesome. So now, when new students are starting Edna, a lot of times, like let's say you can find the deal, and how are they raising the capital? Like, let's say if someone needs $1 million to close a deal, what sort of, things that specifically the students are doing to attract the new investors and sort of bring in the sources of capital?
Well, the first thing that I teach them is getting vendor financing, because,
Hmm.
vendors are predisposed investors. They already believe in real estate. They already love real estate. You don't have to teach them anything.
Sure.
They,
Hmm.
they probably already got a good building or a decent building.
Hmm.
Generally, when people are selling, it's for a few reasons. They have a larger deal they want to move on to. They're retiring.
Hmm.
They've got a divorce and the spouse wants a settlement,
Hmm.
or there's illness.
Hmm.
So usually there's some crisis that's going on that's causing them to get out of their building. It's
Sure.
not that there's anything wrong with the building. So
Hmm.
when they think about taking their money out, what are they going to do with it?
Hmm.
So there's scripts that we go through that we ask them, what's your plans? And it's just a conversation.
Sure.
And when you find out what their plan is, and it's the retired couple, or somebody who wants to take the money and pass it on to their kids, well, then that opens the door for asking for vendor financing. So that's one
Right.
of the first things we focus on, because if
Hmm.
you can get a million, or say it's a $4 million sale, and if you can get 500,000 from the seller, well, then
Sure.
you only need 500,000.
Right.
um, and so that really reduces it. We also really work hard on getting CMHC financing, because
Hmm.
if we get CMHC finance, we only have to put 15% down.
I
So,
see. Mm.
if you have a $4 million building and 25% down is $1 million, you
Sure.
drop that down to 15%. Well, it's way less that you
Sure.
need, first of all, and not
Absolutely.
everybody can qualify for CMHC. So we have some tips on that too.
Hmm.
And then you get the vendor to finance. And lots of times when you thought
Hmm.
initially that you needed $1 million to close that property, in the long run, you only needed a couple 100,000. So
Right. Right.
I have a whole system for people to find the money. Everything from, people you already know, everybody
Sure.
that's in your list on your phone,
Hmm.
your email list,
Hmm.
people that you get to know, even fellow students. I find that sometimes the fellow students are funding other students' deals because they got the money, but they haven't found the deal yet.
Right. Right. Hmm.
Also teach it's great to be a joint venture partner first before you ask somebody to joint venture with you, because then you've
Sure.
seen both sides of the fence. So
Absolutely.
those are some of the things. And the other thing is really providing value to your potential investors. Like, teach them. I tell my students, when I teach you a concept
Hmm.
and it makes sense to you, go share that with everybody you know.
Hmm.
Your mom, your dad, your brother, your sister, your coworkers, your boss. When you learn something, because if you learned it, there's a 90% chance, 95% chance that they don't know it. As a financial advisor, I didn't understand real estate. I
Hmm.
have clients come in to me and say, I'm thinking of buying, property, some of my friends are, and I go, really? You want to invest in an asset class? And in our area,
Hmm.
the most it grew every year was about 3%. That only grows like 3%. I didn't understand, and I was a
Sure.
financial advisor. So most people out there on a day-to-day basis that you're going
They
to run
don't
into,
know. Right.
they don't get it. So you
Sure.
have to teach them. And one of
Absolutely.
the first questions I get my people to ask their potential investors is, do you own a home?
Hmm.
And most people do. And they go, yeah. And how long have you owned it? And if they've owned it for any length of time, it's probably a big portion of their net worth.
Sure. Hmm.
So then from there, so it's been a good investment for you. Well, I didn't buy it for an investment. I bought it to live in. But when I think about it, yeah, it's been a great investment for me.
Sure. Hmm.
What if you did that again?
Right. Absolutely.
And it's that easy to start the conversation with people.
Awesome. Awesome. That's a lot of power and a wide ranging answer to many strategies and many different things, any newbie can do. So I appreciate the detail there, Edna.
Yeah,
Uh,
you're welcome.
Now, Edna, moving on, what is like sort of the best piece of advice you have received in such a long career you have had that has kind of helped you, sort of scale bigger and stay disciplined? Give us some pieces of advice you have received from whether it was your mentors or your family or any other investors that you have networked in your career.
You know, the best piece of advice I got, and I still hand it out every day, is get and stay around like-minded people. Because there's so many people out there that will talk you out of your dream. And
Mhm.
if you're not around people like us who can say, you know what, and I always say this, you know what, I'm not a rocket scientist. I
Mhm.
got my grade 12. I didn't even go to university.
Mhm.
And I was a single mom at age 16. If I can build a portfolio, you can build a portfolio. So you just have to get with the right-minded people that believe in you. Because a
Sure.
lot of
Mhm.
times, like I tell my students, you know, you're not going to have that belief even in the deal
Mhm.
at the beginning. You're going to need me to help you say, yeah, is that a good deal? And yeah, that's a good deal. Let's make an offer. Or that's an average deal. But you know what? One of my early mentors also told me I didn't make my fortune on a whole bunch of home runs. He said most of my deals were average deals.
I see.
And that's the other thing too, is lots of people think they're going for that one home run. And
Mhm.
you know, out of all the properties that we bought, we've had a few home runs, but we haven't had 520 on home runs. You know what I mean?
Sure. Mhm. Mhm.
So that's the other thing to wrap your head around too. It's a long-term game,
Sure.
and but being around like-minded people is the biggest and best thing you can do. And when I mean say like-minded people, it's not people that go to that same meeting you went to and didn't buy anything. That's not the like-minded
Right.
person you want to
Right.
be
Right.
around. You want to be around somebody who's doing and has done what you want to do.
Absolutely, and I also like to supplement there and by also saying that successful people have their own challenges and sometimes it becomes a lonely place, right? And networking with those fellow people, kind of sort of you're sharing the pain, and it's sort of a solace where you can relate to other people, and some people can echo to you saying that, oh, it's exactly similar things happened to me, but guess what? A year ago, this was something really worse that has happened to me, and that sometimes puts you in a very great spot. Would you agree?
I do, because you know what? It's not just the positive things that happen to us, but it is the negative things that we can share. And
Sure.
you know, just as an example, in one of my masterminds, one of the new students was beating themselves up for something they did. I can't remember what it was, something about a tenant. And the senior person had owned real estate for 30 years said, you
Mhm.
know what? I know better. And that just happened to me last month. So she said, don't beat yourself up, because sometimes you can do every bit of due diligence you want to on a tenant and you still screw up. Like
Sure.
some of them are pretty slick. So yeah, that person immediately felt better because they
Right.
went, really? That happened to you? And because they're 30 years in the business. Yeah, that happened to me just
Right.
last month. You know, so it takes some of that away too, because
Right.
you know what, we can't make perfect decisions every single time. So you're right when you say, you know, yeah, you know, I had that, you know, water challenge in my building, or you know, I had that high water bill or that tax bill, and these are some of the things we did to offset it, you know.
Awesome, awesome. It's been a pleasure, Edna. I appreciate your advice. I hope I can reach out to you again in near future and learn about more
Absolutely.
updates and stuff. So
Yeah.
thank you for sharing your advice. Please share with our listeners how they can reach you and learn more about you.
Sure. Well, you know, I do Mindset Mondays and free coaching Fridays on my Facebook page, and it's
Mhm.
Coach Edna Keep. And if they want to get on my email list to see anything else that we got going on, they can just reach out to me at my email address, which is ednakeep.com, or my website, which is ednakeep.com. Or sorry, my email address is edna@ednakeep.com. My
Sure.
website is ednakeep.com, and they can check things out. I get lots of free tips. But if they want to really get into buying multifamily, I also have a course that I offer. And if they're interested in that, they just can book a strategy call with me, and we'll see if it's a fit.
Awesome, awesome. Thank you. And for listeners of our podcast as well, we have lots of news articles and lots of different, stats on our website at premiumcashflow.com. If you are interested in learning about passive investments, we time to time have various opportunities. So please log on to our website, premiumcashflow.com. There you can register yourself using Invest with Us link, and we can jump on a short call and know about your goals and what you're looking to do, which markets you're looking to invest, and things like that. So thank you for your time, Edna. It is a
You're most
pleasure,
welcome.
and I wish you well and look forward to, sort of chatting with you on another episode.
Absolutely. Take care.
Thank you.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.